with the employment picture. There are still tens of thousands of people out of work in this state. What do you think it will take for Massachusetts to start to generate jobs again?
Oh, so we're going to start with an easy question, huh?
Yeah, easy.
Is this
Just
thing
hop
on?
right in there.
We got that on?
We got it on.
Okay. Well, I think in Massachusetts, I mean, our problems are basically the cost of living and the cost of doing business. I think job-wise, I mean, Alan's probably spoken to this already. I mean, job-wise, we're better off than most other places. I think the kinds of things we need to do is really more education-orientated and maybe infrastructure-orientated, so that from a government point of view, if you could put programs into those two categories, that could be very, very helpful. I think one of the things, in fact, I heard you on the radio this morning several times. I was in.
I'm everywhere.
You're everywhere. I mean, it's
the magic of radio.
How did he do that? But anyway, but one of the stories on the business program was the fact that the apprenticeship model is no longer working. So people in manufacturing really don't learn on the job and therefore move up to middle class, and so they need some opportunities to go get those skills elsewhere. And that's all part of the globalization that's occurred that Carol's articulating about. So those kinds of programs are the kinds of there are no macro programs, they're much more micro programs that could make us do a little bit better. You know, I think our biggest issue is that about over 35% of our exports in the state go to Europe, and as Carol has highlighted, that's a serious issue. Although you know, you sound a lot more like an economist than an investor, sort of a little more dismal. I mean, my own comment would be that you know, they're going to dither with that for years, and that dithering will keep economic growth there very slow. But you know, I look at it, they're fighting over who's going to be holding the hot bag at the end of the day, whether it's the public sector, or it's the private sector, or it's the bankers who hold the Greek debt, and so on. So that fight will go on, and that will, and what Mario Draghi is doing is the same thing Ben Bernanke has done. He's created enough liquidity so you don't have to solve the solvency problem, and that can go on forever, and we all describe that very quickly as kicking the can down the road. And that can, as that occurs, we don't have that vigorous economic growth. We just have mild economic growth going forward, and so goes the country, so goes Massachusetts. So whatever we do, it's on the margin. We really need that other issue addressed first.
Last year you mentioned your deep concern for the commercial real estate market. Have you changed your opinion about that? Is the market improving?
The market has stabilized. Prices have rebounded a little bit for what we call core quality real estate. We still have concerns in the secondary markets and the secondary owners. But you know, it's a classic case. If you got the money and you're rich, you're okay. You're big. So the big guys, I think I probably said last year, I've been saying this many times, the big guys are fine. It's the little guys that are hurting. That's continuing right now. It's the big guys who can get the money from the banks or through the public markets. The little guys can't. Most of the little guys are underwater, and a lot of the quote big guys, as I call them this morning, are raising a lot of capital, and a lot of that capital wants to actually get into commercial real estate for several reasons. The returns are better than on other assets. There's a diversification, but they all want to be in the same place. They all want core real estate in core locations in core markets. Another way of saying quality, which is the same thing you've seen in the U.S. Treasury market. And so they're bidding up those prices above where they were, well, above their long-term average. And I think that's going to continue. In this environment that Carol, I think, was describing, I'm sure Alan did too, is what we're finding is that investors want to be in quality assets, and they also they don't plan for an average day, bad day, an average bad day. What they plan for is the worst bad day, and the worst bad day means the implication of that is you got to have liquidity, right? If things get really bad, you got to have liquidity, and that's the way people are thinking. And commercial real estate, which is core, core, core. has liquidity because there's so much demand for it.
I know also that you had mentioned last year about the number of projects underway in the Boston-Cambridge area, the Innovation District, Kendall Square. Is that growth starting to go out beyond the 495 belt?
No. No. No, it's all coming the other way in, and it's doing the same thing in other parts of the country. And a lot of that is just restructuring of where people want to be, right? Vertex, Biogen. So it's where they want to be, and they're moving, but it's no growth in the marketplace. In fact, there's a contraction, a very mild contraction in the marketplace.
Are we still outperforming our competitor states?
Oh yes, this is good news here. This is the
give us
good
good
news. In Massachusetts, you don't want to be in some other places.
Like what? Like which states?
Oh, I guess the real poster child would be Las Vegas. You know, you could also go back to Phoenix, still parts of Southern California, except for Riverside. So the places you really wouldn't, you know, and there's Florida too. I mean, and the same thing's happening in Florida. There's a big development that's just been financed for condos in Miami. At the same time, there's an enormous excess availability of Miami condos. So it's a restructuring where people who got some cash and can position themselves for those who are the haves, you know, Carol, position themselves for the haves, and are taking from those who are weaker and leaving nothing for those who have nothing. It's a tough situation.